All right, great. It's a very big honor and privilege to come and share today. Can I just have a show of hands? How many of you are meeting for the absolute first time today? First time? Or have we met before in other events? No? All right, so I've been around the industry for a long while. I just joined Lion Global about 6 months ago. Prior to that, I was with some other companies that are also exhibiting within this hall. All in, I have about 16 to 20 years of industry experience. Now, I obviously know that when we come up on stage and we talk about Asia, the gateway to new opportunities. Some of you are going to go like, yeah, bro, I heard this before. 20 years ago, people talk about the turbo twin engines of Asia, right? India and China, but nothing fired. However, we do think that today is a little bit different. So we're going to come and share with you, why you should reconsider Asia within your portfolio, all right? But I'm not going to do the heavy lifting today. I'm going to come out and do a bit of a summary at the end. I would really need your help to join me, to put your hands together, to welcome my head of Asian equities, Ms. 𝗬𝗰. She's actually the one running the portfolio, and she's running a team of entire portfolio specialists, portfolio analysts, and portfolio managers who look at Asia and all throughout Asia. So ladies and gentlemen, can you please join me in welcoming 𝗬𝗰 on stage, please? Thank you.
Hello. Oops. Thank you very much for joining me this this afternoon. It's not been an easy start for Asia in 2025, right? Because of the run-up to the inauguration of Trump and all this noise about tariffs on China, tariffs on the rest of the world. So it's been a difficult start. There are also concerns that his policies will be very inflationary, and that will cause interest rates to stay higher for longer in the US, and for the US dollar to stay higher for longer, which is all not very positive for Asia. But I think there are three things that really matter to the Asian markets for this year. I think, of course, the Trump policies. Secondly, China's response to these policies and their own domestic stimulus. And thirdly, what Asian markets can do to help themselves, and where are the pockets of opportunities? Okay, so what we know from Trump 1.0 is that his bark is actually worse than his bite. Because firstly, what he throws out, that his threats are used as a negotiating tool, as a starting point. So it usually gets moderated. Secondly, there are checks and balances. So not everything that he wants actually comes through. So I think that the market has priced in the worst, but the outcome could be a lot better than expected, which means a bit of a relief and for Asia, which has already sort of taken the pain. So if you look at what happened in the past, you'll see that the US dollar peaked before his inauguration because he had all these big threats, but in the end, they were all moderated. So the pressure on the US dollar eased off. Okay, the next elephant in the room is China, right? Now, China's economy has been in the doldrums for the past couple of years, and the stimulus, their policies have not been sufficient to resuscitate the economy. But I think the shit has hit the fan, right? Things are so bad that they need to do something more. They're also faced with external headwinds. So I think the resolve of the Chinese government to support the economy, to stabilize the economy, to support the property market, and to support the stock market is never been stronger. So I think that what you'll see going forward is that there will be a lot more stimulus policies going forward. And if you look at history, what has driven the China market is stimulus, right? The rallies in the past have really been driven by policy stimulus. Okay. Now, I'm going to skip all these macro charts because I'm sure you've heard them before, but basically fiscal stimulus is accelerating, so is monetary policy stimulus, okay? Okay, now what I think that Asia has and can really add value to investors is that you will see over the next couple of years this improving shareholder returns across many different markets. I'm not just talking about one market, but many different markets. China, let's take China for instance. You know, already what we're seeing is that the state-owned enterprises are forced to improve shareholder value by focusing on their return of it on equity. So what they're doing is that they are buying back. There's a lot more share buybacks, there's a lot more dividend payouts, and as a result, if you look at these SOEs, many of them have actually done very well relative to the market. Korea is another shareholder return market. This is the Value Up program that they've introduced, which basically encourages many of these big chaebols to improve their shareholder returns by engaging in much more buybacks and also dividend payouts. Now, Korea in the past has been one of the cheapest markets, right? They're cheap for a reason because the shareholder returns are not quite there. They don't pay out good dividends. They don't buy back shares. And if they do buy back shares, they just keep it in their treasury. They don't cancel it. So you don't get that boost in earnings per share, unlike what you see in the US. But all that is changing. And that will help these companies to re-rate over time. Okay, even in Singapore, right? Singapore, I think they're actively trying to get this going as well. And I'd just like to highlight an example. You know, if you look at the three big banks in Singapore, right? DBS, OCBC, UOB, right? DBS has outperformed the other banks by miles over the last 5 years. And the reason for this is not because, you know, DBS is enjoying a much more favorable operating environment than the two other banks. It's not that. It's because they have a policy of actually improving shareholder returns. They have managed to jack up their returns by reducing excessive capital held on their balance sheet, by buybacks, by improving dividend payouts, and that has seen the stock actually trade at a premium to the other two banks. So I think this improving shareholder value theme holds a lot of water in many of these markets in Asia. Okay. Okay. Now, some of the themes that I kind of like, in Asia. I mean, it's as a whole, yes, Asia is affected by what's happening in the U.S., etc. But what I do see pockets of growth, and one of the sort of interesting pockets of growth, I think, is defense spending. Korea defense, and to a smaller extent, Indian defense. I like these two themes. In Korea, they are a big beneficiary of rising defense spending globally. What has happened is that the US has kind of retreated as being the sort of global policeman. And they're saying, we're not going to do this for free anymore. They want other countries to contribute a lot more into NATO, etc. So what you see is that countries are also forced to increase their own defense spending because the US is retreating. We've seen bursts of geopolitical tensions in the Middle East, in Ukraine, Russia, you know, in the backyard of Europe. And that has also increased the insecurity of all these different countries. So if you look at what's going to happen over the next decade, is that defense spending is going to rise globally. Now, why is Korea, you know, a beneficiary of it? Now, Korea, you know, has always been insecure, right? With North Korea in the backyard, you know, you have to keep your defense spending high. You have to keep your defense industries alive, you know, just in case you have that war, right? So they are one of the few countries that can manufacture defense equipment in great quantities. And that's why they're now being a big beneficiary of this rise in global defense spending. Sorry. Now, the other pocket of growth I think is quite interesting is Malaysia. Now, you've just seen them launching this special economic zone, you know. They are building loads of data centers, and there's going to be this high-speed rail connecting Singapore and JB, right? What is interesting about Malaysia is that finally, after so many years, we are seeing political stability. Political stability, which means people can start to invest in the market. We are seeing a significant upturn in the investment cycle in Malaysia. And I think that, you know, many of these Malaysian corporates will stand to benefit from this upturn in the cycle. Oops. Okay. Longer term, you know, you all know that Asia has a young and growing population, which means you have the growing middle class and more spending. So these structural drivers remain, you know, intact. And of course, it is going to continue to be growing as in a manufacturing hub, and that will benefit its exports. Now, I just wanted to talk to you a little bit about India, okay? Now, India, I never thought of as a real manufacturing hub because its infrastructure is poor, you know, it always suffers from brownouts, etc. And it's very difficult to be a serious manufacturing hub when you're constantly suffering power outages. But that has changed. Under Modi's rule, what we're seeing is that power investments has accelerated, and they are no longer suffering these sort of power outages. They have a lot more secure supply of power, and on top of that, the infrastructure is improving. There's the rail infrastructure, the port infrastructure, the road infrastructure, etc. So that makes India a much more palatable place to actually invest in and to make your goods in. I mean, I think the industrialization theme in India is going to be an attractive feature over the next 5 years. And these themes are basically in defense, in power, in broad-based manufacturing and exports. The other thing I thought was quite interesting is pharma, because they will be a beneficiary from the pivot away from China. With all these tariffs, US tariffs, and with all, many of these Chinese healthcare companies going into the verified list, I think that India will stand to gain market share on this front. So that will also be a big boost for their healthcare sector. Okay, last but not least, I guess I don't need to tell you that the valuations in Asia actually are pretty compelling. I think much of the bad news is already, in the price. And I do think that over the next 12 months, that you could see some positive catalysts in terms of the US policies not being so detrimental to Asia, and B, the China stimulus, which will help to catalyze growth for the region, and see, some of these themes that I've mentioned. The Value Up program, which will also be very positive. Thank you very much.
I'll take over. All right, can you just join me in thanking 𝗪𝘃 one more time? All right, so ladies and gentlemen, if you can, allow me to summarize very, very quickly in just 3 very quick pointers. So the first thing that I wanted to just say is this: the macro environment right now, right, is actually very, very favorable for Asia. So if you miss a lot of the slides that she was talking on, that's all that we're trying to say. Yes, Trump 2.0, all that is going to be somewhat of a concern, but we believe we know how to handle it, and the countries and the companies all do know how to handle it as well. The next thing, not just for the here and now, because Trump is only here for the next 4 years, we're looking at Asia for the next 10, 15, 20 years. And if there's any one thing that happened in the news this week that I disagree on, and that's Joe Biden saying that nobody is going to overtake the US anymore. Did y'all catch that one? I think that's quite laughable, right? And I do think that China is going to do it. But at the same time, when you look down the list, it's not just a China game. There is Korea, there's 𝗪𝘃 mentioned, there's Thailand, there's Vietnam, there's Indonesia, many other opportunities. Last but not least, if you forget anything, there's always this thing called to invest and make money, you have to buy low and sell. Oh, come on, buy low and sell? Hi, that's right. And Asia right now is compelling because of valuations. Now, if you need more information or you'd like to have a deeper conversation, please pop by our LGI booth as well. We have this little document and we produced it so that we can have conversations with you. We know that you're going to listen to a lot of news today. So what we have done is we've summarized. On the first page, we actually give a quick summary of what we think are pertinent news in the market today. Following that, we give you a bit of what our market outlook is like, right? We think which markets are positive, which are negative. That's all in the first column over here. But to help you in your investment decisions, we also talk to you a little bit about valuations. What is expensive? What is cheap right now? So if you'd like to find out a little bit more, by the way, this is something that you can take, and it's going to be refreshed every 2 to 3 months. So it's going to be constantly updated. Please pop by. We'll have further conversations with you. So in closing, I'm going to do this right now, something a little bit different that none of the presenters have done. I need to put down the mic. Can you all hear me if I don't use the mic? Great, wonderful. All right. No, they have. Okay, he's going to help me so that I don't need a shout. All right, so if I can sum up by doing one thing for you all, I hope that investing in Asia becomes a what? Bro, you feel like that, I have to keep turning to you. All right, it becomes a habit, that's right. Why is it a habit? Because when it's a habit, even if you forget it, you are left with a bit, that's right. Because at the end of the day, you are stuck with the what? You are stuck with a bit because you have it. So when you invest, I hope that investing in Asia, relooking at Asia will become a habit, because once you park into it, you allocate into it, sometimes you're tempted to forget it, to throw it away. But the thing about investing in this, when it's a habit, habits always have an interesting way of coming back. That's where you all clap loudly for us. Thank you very much. So see you later. We're at the LGI booth. Thank you. Back to you.